Let's dive into the massive crypto drama last week. One man who swore he would never sell just quietly dumped some of his stash. This week, MicroStrategy CEO Michael Saylor did something that broke his ironclad rule since he started accumulating back in August 2020. He sold his Bitcoin. So why did Saylor slap himself in the face and sell? It all comes back to STRC. It's a product he has been widely issuing over the past 10 months. This is a perpetual preferred stock that Saylor used to raise $10.3 billion. The promise to investors is simple. It pays a fixed 11.5% annual dividend. In other words, investors get a stable high yield, and Saylor takes their cash to aggressively buy more Bitcoin. But here's the catch. Paying out dividends requires cold and harsh cash. MicroStrategy USD cash reserves has plumped to just 900 million by the end of May. They're running out of cash to pay that interest. So, Saylor was forced to sell off 2.5 million worth of Bitcoin at an average price of 77,000 just to plug the hole. Because MicroStrategy doesn't have yielding assets and Bitcoin itself doesn't pay interest. To fund that 11.5% payout, you either have to keep convincing new people to buy STRC or you have to sell your Bitcoin. But the problem is, Saylor isn't just a spiritual leader of the crypto world, publicly promised never to sell countless times. So this one little sale absolutely terrified the crypto market. BTC plumped 16% this week, dipping below the 80,000 mark. MicroStrategy MSTR stock fell to its lowest point since November 2022, crashing 73% from its historical high. Honestly, Saylor drama isn't really just a symptom of a much larger problem the crypto space is facing right now. The crypto market is currently suffering from a fatal narrative vacuum. Capital always flows to the sexist narratives. And right now, Bitcoin just doesn't have a compelling story. Where did all that money go? The answer is AI and high-growth tech stock. Geopolitical conflict has heated up defense and energy. Nvidia's computing power miss has drained growth capital. And now, massive unicorns like SpaceX and OpenAI are lining up for trillion-dollar IPOs. But that doesn't mean crypto is completely dead. Institutions are actually quietly putting in the work. JP Morgan, Bank of America, Citi, and Wells Fargo are teaming up to build a tokenized deposit network expect to launch by 2027, enabling the instant on-chain settlement. BlackRock Bitcoin ETF just crossed the 1 trillion mark, setting the record for the fastest ETF in financial history to reach $1 trillion. So to sum it up, Saylor's core thesis will eventually be forced to allocate to Bitcoin. But before we reach that future, his tightrope walking financing model is facing a life or death test.